Alright, what's going on everyone? I'm back with a new video regarding market profile. So today actually I'm going to break down what happened yesterday, so Thursday the 23rd of December, how I got a pretty clean 20-point trade, and essentially how it happened, essentially why do I have these references, why did it hit these certain destinations. I'm going to go over every single point. So let's just get started. So first of all, what I want to show you guys is that this was I wanted to actually start with the plan for yesterday. Nothing really special, but this is what makes these setups really perfect, because it's really everything kind of lines up, and you'll see what I mean by that in a few seconds. So just going over step by step every single reference. First, what I actually noticed here is that we had a failed breakout of balance, therefore an upside destination. So if we actually take a look at the chart, we'll notice that we had this kind of 4-day balance here with this low here, this high here. You could have used this low for the balance low, but it doesn't really matter. So what actually happened is that, as you can see, on the 21st of December, we actually, the previous day we had essentially attempted to one time frame down, but we failed. And then, according to balance rule, if you actually break out of balance, but then you come back and accept prices back within the same balance you actually broke out of, well, essentially the ultimate destination becomes the balance high. So if we actually take a look at Discord, it's an important concept. If we take a look here, I believe, yep, there you go. So if you look at scenario number 3, it's the exact same thing. So failed breakout of balance. Once acceptance is found back inside of balance, ultimate destination becomes the opposite extreme of balance. So this is what actually happened, except it wasn't on the upside, but it was obviously on the downside, but it's the exact same thing. So this is the first thing I had in mind here. We found acceptance back within balance. Obviously we didn't have this profile yet. We had only these to work with. So the ultimate upside destination was this balance high here at 47.24. Then in terms of actual references, what we had was, usually when you'll see on my trade reviews or references, well, I'm in the reference channel, if you see these kind of pink lines here, kind of red pink lines, these are simply low volume areas with single prints. So what these show, what I like to think of them as essentially areas where price got skipped. There was no volume at these prices on the y-axis. Essentially there was a lot of initiative through these prices, and it shows us, in this case obviously because we're in a kind of a bullish profile here, it shows us conviction and change towards the upside. So essentially if we want to come back to these areas, we're expected to defend them. If we do not defend them and start filling them out, well, that's a sign that bulls are essentially kind of giving back power, and change has kind of faded away. But in this case, these two held. So we had double change, as I like to call it. We had this low volume area here, and we had this one. So an example of low volume area that actually filled and essentially showed that change had essentially gone away was this one. If you take a look at the 15th of December, it had a essentially low volume area, kind of a probe here. I mean, no, the probe was here, but we had this low volume area here, and essentially the following day it filled, and as you can see, right the next day we continued to one time frame lower. So in this case it showed that essentially all of this change that occurred here was essentially gone. But in this case, as I said, these were good references. If we came back to them, we're expected to defend them. So yeah, it must be defended, as I said. Also, we had a prominent slash failed POC. So this is kind of a long topic, but this was the only downside factor I really noticed coming into yesterday. It's obviously not perfect, but so what happens is that if you have a very prominent POC, it will be very hard to diverge away from this POC. So in this case, I believe it was like 9 wide or something. Usually for ES, I like them to be more than 8 wide, so at least 9 wide for me to consider them as prominent. That's not so much of a big issue. I mean, I wouldn't be concerned about a prominent POC if I'm looking to go long the following day. I'm not too worried about it. However, what I would be worried about is a failed POC. But in this case, it wasn't the most clean failed POC. So a failed POC is essentially this here. I'll just mark it, as you can see. I'll just mark it in yellow. Usually my yellow references are either failed or prominent POCs. So failed POC is essentially when your POC stays within the value area, despite the settlement being literally anywhere else, like at the opposite of the distribution. So in this case, it was extremely far. POC stayed there, and this most likely means that we have a high probability of revisiting this POC pretty soon. Why? Because essentially all of these participants that got long here essentially made the inventory too long. They're called essentially longs in the hole, and unless we actually gap up and accept higher prices, these guys will probably get liquidated. They're probably weaker hands and will get liquidated and eventually retest the POC. But as you can see in this case, with a proper POC, neither value or volume kind of shifted towards settlement. But yesterday, the day before, I didn't call this a kind of a full POC. I think in my review I wrote it kind of a semi. Why? Because despite the settlement being higher, I didn't really worry too much about this, simply because value still kind of got near this settlement. Plus, as you can see here, VPOC still got near the high, so it means that we found and we accumulated some volume towards the high, which is good. So I didn't really worry about that. I still wrote it down. You always gotta refer to every single reference, even if it's not particularly in your favor. But yeah, so that was kind of the only kind of small concern, but nothing too bad on that. So then if we continue towards the other references, we had the spike-based reference, which will determine change. So this was the most important reference I was looking at going into yesterday. And why is that? Well, because when you have a spike, essentially you can essentially draw what is called a spike base. So spike base will usually start at the L's high, but if you have a certain TPO that is above L's high, so in this case we had G, essentially you don't want to put your spike probe here, you want to put it there. It's a bit more accurate, and it's kind of the start of this low volume area. So when you get a spike, it's really interesting because you have 3 scenarios that can play out the following day. Let me see real quick if I can draw them for you guys on the whiteboard. Let me check. Alright, I think we're good. So let's say we have a distribution, so we close around here, so let's say this is our close, and as consequently this is our spike base. Somewhere around there is our spike base. So you have kind of one of three things that can happen. Either we open above the spike base and we get acceptance and we continue higher. But the thing is with this is the most, the highest confidence setup you can get. And why is that? Because obviously during a spike you'll have initiative being taken, right? With the whole concept of initiative and responsive that I teach in the mentorship, you have the whole concept of initiative and responsive. So I'm not sure if I put it there, but never mind. What I wanted to say with this is that this is essentially the highest confidence for bulls in a spike towards the upside. However, we may have, let's say, an open within the spike. An opening within the spike is pretty much low confidence because it will usually result in a kind of rotational market for the day. So essentially, we're kind of moving sideways. But in this case, it was also pretty interesting for me because the spike base will usually act as support. So if we came down here, we found some sort of rejection, some sort of accumulation, I would have gone long looking for upside plays. So as you can see, I wrote it down there. Either we opened above or we opened inside and then we rejected the spike base and we continued higher. So So yeah, but there's another option that can happen, which can either occur with an opening here. I mean, it can occur with kind of any opening, but the most common one I would say is that essentially we open with below the spike base, and essentially we find acceptance. So in that case, that means change has occurred in the market, and essentially we don't want to be looking for upside plays. We want to be looking primarily for downside setups. So did I didn't write it in this case, but as you can see, I didn't include a setup below the spike base because essentially it becomes invalid, because most likely if we open within the spike base, there's a couple of things happening. First of all, we're most likely going to revisit this prominent POC. Second of all, there's bearish change because we opened below this spike base, but also we open right in the middle of value area, and when you open right in the middle of value, believe me, you don't want to. Usually, you don't want to be looking for trend days, because I mean, most of the time you're just gonna rotate for at least during the initial bounce or the couple of first periods. You're gonna rotate because essentially sentiment has not changed relative to the previous session. So yeah, there you go. Alright, so this was, as you can see, this was the most important reference going into yesterday. Also, a side note that I want to make is when I do these kind of drawings here, these are like the ideal setups. That doesn't mean they will occur. We could have opened here or literally below the spike base or gapped down yesterday on, and I wouldn't have gotten any setup. But in this case, the ideal setups were expected, yeah. So just so you know, if I do these, I don't include every single setup, because let's say I draw something here, if we gap down or open below the spike, it would have been a completely different story, you know. So just so you know. So what actually happened now that we got we've been through that, we can go over the other stuff I looked at. Also, you want to look at value area. Where is value area relative to the previous session? In this case, value area is shifting higher, so that means participants are accepting higher prices as fair value. Essentially, this was the acceptance, so the 70% of the 21st of December, and this was the essentially fair value accepted area, 70%, whatever you want to call it, of the 22nd of December 2021. So that means that essentially sentiment has changed. So also, a pretty important reference, as I mentioned earlier in the video, we really wanted to defend this low volume area here yesterday. We didn't even have to, which is pretty good, but we really wanted to defend this. Also, if we take a look at this, J's low here. I'm not sure you guys can see it really well on the video, but J low is an afternoon low. And it's kind of the same concept as a spike base. Spike bases and afternoon lows are my absolute favorite references because they're really a clear depiction of change in the market. So if you essentially find acceptance above the afternoon pullback low in this case, well in that case you're most likely you don't have any change. But if we find acceptance below, well in that case the low volume area most likely is gonna get filled, and change towards the downside would have occurred. So, with that being said, these were the references I was looking at going to Thursday, Friday holiday, yeah, Christmas Day. I mean pre-Christmas Day. But now let's go over what actually happened intraday. So intraday, as you can see, we opened above the spike. So what does that mean? If we come back to the board, we know that opening above the spike is extremely high confidence, and that means that essentially initiative that occurred during the spike is not over and is most likely going to continue. So there's a saying, obviously, go with all gaps that do not fill relatively quickly. In this case, the gap did not fill. We afternoon high was somewhere around here. Essentially found acceptance. It was a valid long. And now we can start looking for destinations. So at this point in the market, we had a gap up where we had essentially an open drive, acceptance above the ON high. Everything is going pretty well, right? But obviously we still got to monitor for continuation. So where are our destinations? So the first one, as we talked about at the beginning of the video, we had a failed breakout of balance. So our ultimate destination is obviously this balance high here at 47.23, 47.23 and a half. It's a few ticks there. And the second destination we had was this, essentially this is all-time high. I think I wrote it down. Yeah, there you go. So this is all-time high. But what is wrong with this all-time high? Why do I mark it in blue? Because usually my blue references will be either poor or weak references. So why do I mark it in blue? Well, it's pretty easy. I mark it in blue because essentially a really clean, solid, properly auctioned ATH, so all-time high, must happen within regular trading hours. So it's got to happen within the normal profile, and not within the overnight. So if it happens during the overnight, the probabilities of that essentially all-time high holding long term are very low. Most likely we're gonna come retest it within a few days, a few weeks, relatively soon, right? And we need to replace it with RTH excess, so regular time, regular trading hours excess with a tail, whatever you want, but it must be within regular hours. So this essentially gives us even more confidence towards the upside, because we know that we have this all-time high here, which is relatively weak, and that we're looking to come and essentially repair. So looking for essentially places to get out yesterday, it was relatively easy. Why? Because we only had two references, and one of them was this one, which was actually hit pretty quickly within 2 hours of trading in D period, and we had that all-time high. However, if you know about initiative and responsive rules, you'll know that in a trend day such as this one, well, when you start seeing this kind of responsive activity sideways, this is most likely because essentially opposing liquidity has been found. So in this case we had a lot of initiative buyers, but eventually they got into responsive sellers, which created essentially this liquidity kind of block here. We kind of accumulated, consolidated, and this was a valid place to get out. You might say, okay, but JKM broke out. Well, okay, obviously that's obviously a fair statement, but you'll never know where we closed. So personally, I got out somewhere around this high here. Somewhere around this high here, around this reference here, for a pretty good 20-point trade. So as I said, just respect initiative responsive rules, destinations, and yeah, it's all good. So I hope this video was insightful for you guys. Let me know either in the comments or in the free Discord. So don't hesitate to join the free Discord. The link will be down below. And yeah, so I'll see you guys in the next video, and I hope you enjoyed. See you.